One, two, testing. One, one, two. Hello. One, two, one, two. One, two, testing. One, one, two. We are live. How are you, Rupert? Good morning, team. Jonathan, how are you? Islam, hello. Stacy. All right. Uh, let's have a look at what we have running. All right, GBP, Japanese yen. I can't find anything on the pound yen, although I was looking at. Good morning, El Gamal. Cock Musics, how are you? Eric, Philippines in the house. Tapan. Well, welcome to the free VIP day. How are you, Beck? How are you guys? Hope everything is good. Right, so this, this gold short, right, was a spot on short, but, I decided to, not close, but move my stop losses to break even here, just on lack of a momentum to the downside, right? So, what I'm going to do, if I get stopped out of break even, right, if I get stopped out of break even, I'm going to look for a new sales higher, right? So let me show you what I'm looking for. Euro yen, Japanese yen. The Japanese yen basket kind of rallying at the moment. hmm So, yeah, basically what I'm looking at here is this. I took a short right here, the break of this lows, right here. Um, shit. I'm sorry, there's moths flying all over my house. And what I'm looking at should go rally, right, and stop me out of break even. Um, I might look for new shorts here at this level. So that remains the question: should I move back my stop losses above the highs, 1950 or so? What was my stop loss? 1949.50 or so, but no. So let's have a look. I also have this silver short. The reason that I took this silver short is because I messed up on my sizing on, here on gold. Instead of risking 0.15%, I risked 0.5%. So I took another short in metals, right, here in silver, risking a full 0.17%. Right, so let's wait for that open and let's have a look at the pound, the FTSE, the FTSE. So the FTSE, I could see the FTSE go higher, right? So here's the thing. All of this high, actually, you know what? What the hell? All of this high. Mm. Oh, there you go. So all of these highs would be actually a good setup to play shorts here on the FTSE, just above those highs with stop losses here above those highs. So let's have a look at the FTSE. I'm gonna place this order on the FTSE. Boom, 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 boom. UK 100. Right. So hold on. Let me see what I was looking at. A 3 minute chart, boom, highs, highs. Let me see on the 5 minute chart. All right. So here. All right. Here. So placing FTSE shorts around this level, only risking 0.2% on this trade, pending order, right? Right here, stop losses above those highs, TP at the lows, giving me a what? 6.5 R, enter. So, let's have a look at what we have here. View toolbox. I really like round numbers, so I'm going to round things up here. Modify. $199. All right. So let's have a look here. All the FTSE is about to open. I'm gonna send this to the VIP group. Hold on. New VIP trade. UK UK 100. Sell limit. Hold on, a sell limit. I'm gonna do this very quickly. Control copy. Stop loss. Just a second, guys. I'll be right with you. Just sending this to the VIPs. And my risk is 0.20%. All right. Also sending this to the free groups because it's free Wednesday. All right. Let's wait for this FTSE to pan out. Let's have a look at gold. Well, quite choppy. Let's wait for direction on that market. So we have any questions? I have a position short running in pound yen. Well, good for you, mate. Get closer to your mic. I'm very close to my mic, mate. You keep getting super quiet. How much more will GBP rally? I don't know. What broker are you using? I like the percent risk. Well, mate, this is a challenge. It's a 100K challenge account I bought on Sunday. And, the pro firm that I use, that I bought it in, uses 8 cap. Well, I don't know if we're going to get filled on this. Gold very choppy. Let's have a look at the pound yen. Japanese yen, pairs are currently very choppy. Now, I had an idea of going short here or placing sell limits on, the euro yen, but I have no setup. There's no inefficiencies here above, and clearly there is absolutely no, change in the structure of this market. So that setup could in fact, it is not optimal. Let's have a look at the Euro USD and the Pound USD. The Euro USD, my friends, I do have a possible short setup, but let's wait. Still looking at gold short. My trading gold short is it's a free trade, and I have risk open here in silver, which is fine. Let's have a look at hold on. I was looking at the pound. All right, so the Euro USD. Have a look at this, right? So the Euro USD. What I don't dig about the Euro USD or possible setups on the Euro USD is that there. What I look for, right, is a clean break of the Asian session range, either highs or lows. That gives me direction for the day, and the Euro USD is just trading, you know, in the same range. The pound US dollar, same thing. The Aussie, same thing. And everything is actually very rangy. What time frame is that you're using? The 3 minute chart made. 3 minute chart. All right. So yeah, what I'm going to do here should, let's have a look at this. Should, because I mean, we're running a free trade right now, right? This is either a break-even trade or profits. So should gold break with these lows, with the 1945.35, right, I'm going to take partials. I didn't take partials on this dip low because the trade was running exactly at 1 R. I take profit, when the trade is running at 1.5 R. I take 1 R out and then, run with the rest. Now, looking at this FTSE, yeah, I dig it. So someone was asking me about the US 100 or the Nasdaq, and I don't trade US equities at this hour of the day. Um, this hour of the day, the little open, I focus on the Japanese yen, metals, and UK equities, which is the FTSE. The FTSE. USD Japanese yen in a bull channel. Let's have a look. I mean, my silver trade looks like it's running quite nicely. Gold failing to break with the lows. Look at the spread in silver. It's just so wide. I am actually thinking about just closing this silver trade right now. I hate the spread in this market. I think I'm going to actually, I'm already short metals, so I'm gonna keep that one. All right, so Herb talking about the US dollar, Japanese yen. Let's have a look. hmm hmm All right, let's have a look at the US dollar, Japanese yen. Mm. I mean, same thing. All right, so this actually. Um, well, I first time looking at the. All right, so here, have a look at this, right? The pound yen. This means that the Japanese yen is dipping. So, um, now that the pound yen has broken with the Asian session highs, your yen should have done the same or is about to do the same, right? I'm going to wait to see um, I'm going to wait to see if this is a fake out or a real breakout, right? I need to see a couple of things before, you know, I consider a bias in this market. But looking at the Japanese yen, it's looking very bearish, right? Let's have a look at the 5-minute chart here on the Japanese yen, breaking very hard with lows. So, but again, this could be a fake out in the sense that there's a couple of things that I need to see in order to consider this a real breakout, right? So I'm going to wait. Also, I don't have a setup to place buy limits, but maybe on the US dollar Japanese yen, um, maybe on the US dollar Japanese yen, but let's wait and see. All right, beautiful. So the well, gold still, struggling with breaking these lows. Let's have a look how. All right. So my original risk, like I told you, I fucked up. I'm going to take 75% off here on my gold position. Oh shit! I should have taken it before 17. I'm gonna wait. I have to wait now. And because of the spread on silver, right? Because of the spread on silver, I can't move my stop losses to break even here in this market. So I'm gonna wait. I'm gonna have a quick look at the FTSE. So yeah, this is what I, hold on, UK 100. Uh, this is actually what I was talking about. This is a fake out short. So I'm deleting my. I'm no, I'm not deleting my FTSE orders. Yeah, that's fine. All right, now I'm taking 75% off of my gold shorts now. 18, boom. All right, closing 85. Hold on, let me send this to my VIPs. Closing 75% of my gold shorts here for 1R. Control copy, boom. So if you're not a VIP, you are more than welcome for the free money. All right, and because I added my silver shorts, to maximize my risk short metals. I'm going to take profits on my silver shorts too. But not quite yet. All right, so back to the Japanese yen markets. Mhm. So this could have been a faking. I really don't have a setup on the Japanese yen markets, guys. I really don't. I could consider, hold on. I'm gonna take profits here in silver. Um, Let me think about this for a second. The thing is that I can't have a full risk here on silver because this was, I'm gonna close it. Because I added this silver short to get to my original 0.15% risk on metals or gold short because, like I told you, I fucked up. Instead of placing a 0.15% risk, I placed a 0.05% risk. So I'm gonna wait for this footsie, the 50-minute charts. This is very choppy actually. Maybe I'm going to reduce my risk here. Yeah, I'm going to reduce my risk here to half. Um, Pending orders. So I have 2.64 lots. I'm gonna place 1.30 lots short. Hopefully I don't get triggered on both. Reducing the risk to half. Hold on. Reducing size and UK 100 shorts to 50% risk now is only 0.10%. All right. The reason that I'm reducing risk here uh, on the FTSE is because it is super rangy, and now I can bring my stop losses higher. I'm going to bring my stop losses higher here um, for a full, so 30. All right, 30. Actually, no. I'm gonna leave my stop losses where they were, and that's fine. I am going to keep trading with that plan. So the reason that I cut my position size in half here on the FTSE is because it is quite rangy, right? Um, in hindsight, maybe I shouldn't have placed this order, but the setup was there, right? The setup was there, and but if you look at this chart right here, UK 100. If you look at this chart, I'm going to get stopped out very possibly. So if you look at this chart, it is quite rangy. So let's wait and see what happens. I am sorry. I am sorry, guys. I'm sorry. You know, my um, yeah, my audio was off, but now I'm back. So what I was saying, real struggle between. Yeah, I muted my sound, Tim. I'm sorry. So between buyers and sellers, real struggle here. So that's one of the reasons I took profits here. And I'm just going to let it run. Pound yana, euro yana. Mm-mm. Yeah, this is actually not a bad setup. So I am going to place these longs on the US dollar, Japanese yen. On this one, I will be risking 0.25%. Oh, I'm not fully convinced yet. Let's have a look. The Japanese yen looks very bullish in my opinion. So here's the thing. Again, if you look at this portion of price action, price breaking with the Asian session lows. This is not a breakout, a clean breakout. This is more of a fake out. So this, in fact, should be a short or a bear trap for the Japanese yen, which means that the probability of the Japanese yen rallying is higher than the probability of the Japanese yen, dipping, which means that the probability of the US dollar Japanese yen dipping and breaking with the Asian session lows is higher than the probability of price filling me in and continuing higher. So, this is not set in stone. So let's wait and see. See, the pound, yen, it's looking very bearish. However, this is an optim. I mean, this setup checks all the boxes on my checklist. So let me just update the group that I got stopped out. And placing this US dollar Japanese yen longs afterwards. So hold on. So it was a good thing that I managed my risk on those UK 100 shorts. Now, US dollar Japanese yen. Here's where I am going to take that trade. So risking 0.25% here with stop losses below these lows And my targets are going to be here. This gives me a 4.3 R. Enter pending order. Right. Let me copy and paste it. Stop loss 25, 30, whatever. All right. Buy limits. This will be my last trade for the session. Stop loss. Shit, TP. Hold on. Um, Risk 0.25%. Sending also to the VIP groups. And there you go. So this is my US dollar Japanese yen trade or trade idea. Let's have a look at the 5-minute chart. You know, well, here's the thing, guys. Here's the thing. So risking, yeah, it's a 4R trade. So you went long, taking it out for sure. I didn't. I'm not long yet on the Japanese. I mean, on the US dollar Japanese yen. Not at all. But yeah, I'm. This is a full risk. So got stopped out a break even on the rest of my gold longs. Just waiting for this lows to get taken out. Just have a look at this. Massive, massive inefficiency in the market. I'm gonna show you here. Let's see if we can. Yeah, sure. Let's have just this is the imbalance or the inefficiency in the market that I am looking to trade, and this is just weak long players in the market that I am waiting to get liquidated. So let's wait and see. 0.25% risk on this trade, about to get triggered. Um, how many pips? 7, 8 pips. Stop loss. Triggered. No. If I don't get triggered here and price rallies, I'm gonna be mad. You have got to be kidding me. You have got to be kidding me. All right, trigger long US dollar Japanese yen. I'm gonna manage this trade very aggressively. So heads up to that. All right, it's looking good so far. Let's wait and see. Like I told you, I'm going to manage this trade very, very aggressively. So I'm going to manage my risk quite aggressively. So I'm going to open the toolbox. But it's looking very good. What do you guys think about it? Again, managing aggressively. Right. So if price breaks with these lows, I'm taking half of my position off. So about 2.45 lots. I don't know if I'm going to be able to update my VIPs or anybody on the groups about this risk management because it might happen very, very fast. But this is what I'm going to do. Not quite yet. Oh, hold on. Here, taking half off. Mm-hmm. Taking half off my risk. And coming back. So I took half of my risk here. And let me see the charts. Yeah, this move is very, very aggressive. So the inefficiency in the market that I was trading got filled, right? And it broke with. So the probability of price stopping me out is higher than a reversal. More so the Japanese yen. Oh, right there. Let's wait and see. Oh boy, my battery is dying. Well, you should all be filled by now. Oh, this dip. Yeah, that was a good thing to have closed my silver and gold longs. Very possibly will get stopped out here, but I manage my risk very aggressively, which works just fine to a 0.15% loss. But this trade is still running. So Herb says the trend line broke. I got nervous about going long. I gotta get more technical analysis. Listen, this is the thing. I mean, if you get nervous about placing a trade, don't place it. You know, the reason I don't get nervous about placing trades is because I have backtested this setup. I mean, this entry model a ton. I have a ton of historic data that tells me that placing this particular trade prints money in the long term. This particular trade stopped me out right at a loss. But because I managed my trade accordingly, um, it really doesn't matter. So let's have a look at what's going on here on the pound yen and the euro yen and the Japanese yen. So today, this actually looks very good. So let's have a look at the U.S. dollar Japanese yen again. So I got stopped out here on the U.S. dollar Japanese yen long, and um, I am not going to take a long here. Why? Because the probability of price coming back higher and then continuing lower is higher. Hello? Can you guys hear me? All right, so stopped out there, but have a look at this. Gold and silver broke with the Asian session highs. Now, the clear setup is in silver, right? Have a look at this. Yeah, I mean, going along here is absolutely not optimal at all, at all, at all. Now, um, the optimal. Can you guys hear me? I'm sorry, but I mean, I keep getting, um, you know, um, notifications here on YouTube about my audio not being good enough. Yeah, I agree with you, Tim. I agree with you. I agree with you. But here's the thing. Let me show you, right? So the setup in silver, it's much, much clearer than the setup in gold. But all right, you guys are good. See what I was telling you about? This is a bull trap, clearly a bull trap. So instead of trying to go long here again, the market stays super rangy. Um, I'm not going to place another trade in this market. Could most definitely, just look at the range here, right? It's just 37 pips on the pound yen. It's 20 pips on the euro yen, and it's 28 pips on the US dollar Japanese yen, right? Massive breakout to the downside. Um, and also, if you notice, um, this and this, right? Uh, Direction today is not that clear. But coming back to metals, this is a clear breakout. So we should be looking for longs and longs only on metals. And the setup in silver is much better than the setup in gold. But spread in silver is so wide, so wide. So what I'm looking at here is this, right? If you look at this right here, this inefficiency or this imbalance was tapped. So I'm not going to use this low as liquidity. This is a protected low in my, my entry model wise. But here we have another inefficiency, big ass inefficiency, right? Now, as you can see, as yeah, as you can see, here is where buyers jumped in. Now, well, I took profits here, 75% of my gold long shorts, right? Because of the struggle between buyers and sellers, and buyers were jumping in. I was looking at the level 2 in gold futures. And then we had a big volatile move to the upside, leaving this imbalance in the market. So here's my opportunity, my trade opportunity. Now I'm going to place a buy limit here with stop losses below the lows. Now let's have a look at the 15-minute chart. I could in fact be targeting these lows right here. I'm just going to place a horizontal line just to calculate the risk to reward ratio on this possible setup, which in my opinion is very good. Right, so if I were to place my buy limits here, I'm looking at a 6.6 R. Now, I'm down about 0.12% today, which is nothing, right? And I'm going to 0.25% on this gold long pending order right here, stop losses right here, and I am going to put my targets later. Hold on, shite. Enter 15-minute chart. So I'm targeting these lows. Yeah. Just a little bit lower. And now let's have a look because I do like round numbers. Right. So I'm gonna send this to my VIPs and everybody, all the groups. You know, um, it's really a shame that sometimes the market gets super volatile. Hmm. Now I'm placing this gold, new VIP trade. Oh, shite. Buy limit. This is a 6.6R, I think. 0.25% risk on this one. Mm-hmm. All right. And this will be the last order that I placed during the London session. But again, optimal setup. Any questions, guys? Any questions? I am here for that. You know, like I told you, I'm not interested in hiding anything that I do. You know, this is a good, well, the reason that I use this oscillator for the F1 strategy is because this gives me, the real momentum. And for example, here, we have there could be a buy setup on the F1 strategy on the pound US dollar. But this is something that I wouldn't take, even though we do have clear divergence, etc. I wouldn't take it because um, this indicator shows me that momentum to the upside is lacking. So let's wait and see for this pullback. Love that gold trade. So potential uh, last night. Awesome, awesome, mate. And you know what? Here's the thing. Like I was telling who was it? Harris, no, Harris or Herb. If you get nervous about placing a trade or a pending order, don't do it. The reason that you get nervous is because you don't have the data backing your trading decisions. So, this US dollar Japanese yen that I got stopped out on, I had the data backing at this particular setup, even though it wasn't 100% optimal setup. It ticked most of my boxes. So, and that's why I also manage my risk very aggressively. And that's also why I only risk a maximum 0.25% per trade. Now, again, would you go long here just by looking at this week's, without confirmation? No, of course not. I already got stopped out. I don't chase the markets, and very possibly gold is not going to fill me in on this possible long that I have, which is fine. Sometimes, with this entry mode, because I use limit orders, sometimes, price fails to fill me in for less than a pip and then goes in the direction of my trade and hits TP. And that sucks. I know that sucks. So, I've been working on that particular leak because it is a leak. Working on the leaks in your trading is something that you really need to do every fucking day because even the smallest leaks can sink the biggest ships. So, this leak that I had, by not getting filled by, less than a pip or 1, 2, 3 pips, was not costing me, was not, taking money away from me in the sense that I wasn't losing money, but it was, keeping me from making money in the sense that, every time that a trade goes against me, I'm going to get stopped out because it is clear, like the US dollar Japanese yen example. It's clear. I got triggered long and then price continues to dip. So I'm going to get stopped out. But when my winning trades don't get filled, my overall profitability decreases. So that is in my eyes, that is a massive, massive leak. All right. So, are you looking for longs here? No. Cancel trade? I'm not on a trade. What the hell are you talking about? How long to hold the expiration open? I don't understand that question. Can you rephrase it? Oh, the market order. Um, there you go. Big bull trap. You know, in this example, the U.S. Gold example, I'm gonna go to here. In this example, right? Um, it's very possible that gold will create higher highs, higher lows, higher highs even, before coming back and triggering me in. Now, if price really, really rallies hard towards my targets, I will cancel that pending order. Why? Because if price in this market that I'm looking to get long, right, rallies very hard, and then around this level starts to dip, I I consider this a reversal, right, rather than a pullback. So what I trade is pullbacks, but in this case that I'm explaining, I would in fact, cancel the order because the move to the downside would be, you know, led by sellers, which would mean that longs are no longer in play. Looking at joining the VIP this weekend, can what can I expect next week? Listen, that is not a good question, right? I'm showing you everything that I do here, right? I'm showing you everything that I do. And like I tell you, I don't hide anything. I don't hide my losses, and yeah, I mean, losses happen. I mean, I cannot choose the day to do this promotion, the free VIP promotion, based on if I'm going to have a winning day or not. I can't do that. No one fucking knows, right? Um, but what I'm showing you is how I manage my risk, right? And I mean, if it makes sense to you, just go ahead and subscribe. And we do have a 30-day money back guarantee made. So if you don't like what we do or what I do, you just cancel your subscription, to be honest. All right, the person good. So remember that I was telling you about, this being a bear trap. Um, Here we have another imbalance. Um, Big ass OB. But the risk to reward ratio, even though the risk to reward ratio might be good here, let's have a look. I'm not gonna place it, right? I'm not gonna place it. Um, Hold on, it's the other way around. just a 4R. But you know what? It's not clear. It's really not clear. So I'm gonna wait for this gold trade. Um, yeah, I don't know if let me recheck this trade actually. Any questions before? I mean, I've been live for an hour. I mean, time goes super fast. I've been live for 1 hour. I mean, and the markets are super rangy. Just have a look at this. Again, this because of now what was it here? Big breakout on the pound. Now this again. Um, all right, so here now, if you look at the Euro USD, right? This is I don't consider this as a breakout. Of course not. But if you look at the pound versus the US dollar, this is a clear breakout above the Asian rate, above the Asian session range. Now, when I look at this, I look for a low here, right? And I look for this. Here's that imbalance. So I could in fact place some buy limits here. But target, I mean, but the risk to reward ratio sucks. And two, uh, you know, today markets are super rangy, and oh boy, are super rangy, and yeah, I don't want to place another order um, other than this one. This one is very clear. But again, the clear one is in silver, which is actually the same setup. It's the same fucking setup, and that is the only one that I'm going to be placing today. Of course, I'm gonna be back for the U.S. Open. You know, I'm gonna be back for the U.S. Open. Yeah, I agree with you, Herb. I agree with you. And if you, I mean, I also look at my F1 strategy setups, and again, everything shows super rangy trading, lack of momentum to any side of the market. Just have a look at this. I was talking about the pound US dollar. I mean, not considering my momentum indicator being a very good F1 strategy setup to the upside, right, on a very strong market. But again, lack of momentum, so very rangy. US dollar, Japanese yen. Well, you know what? Should we had placed a US dollar, Japanese yen long? No, of course not. Of course not. So have a look at this, right? This the green box is the London range. The blue box is the Asian session range. And again, just fakies and fakies to the upside and the downside. This is absolutely um, right now after the volatility of the open, trying to place a trade without a clear indication of direction is burning money. How many people there go live? We're two traders that go live. Is that what you're asking? hmm the FTSE has a good setup long, but I don't trade the FTSE, an hour after the open. Yeah, I'm just gonna chill, wait for this possible long to fill me in, and that'll be it for now. I'll be back for the U.S. Open, and yeah, we're going to keep on doing the same thing. You know, losses happen. It's part of the game. But you. I mean, you don't have. The thing about this is that if you're results oriented, you're never going to have one, the discipline, and two, the correct mindset to be profitable long term. And when I talk about being results oriented, it's focusing on the outcome of the past trade or the past five trades, right? That doesn't help you with your psychology. Now, coming back about what some, I don't know, I don't remember who it was, right? That said that he was nervous about taking that long on the US dollar Japanese yen, on which I got stopped out at a loss. I understand, right? Because it's not your setup, it's mine, right? It's my entry model. But um, the reason that I trade this entry model, right, is because I have backtested it on all of these markets that you're looking at here, right? Um, and I know what to look for. Today was not the best day, right? Direction wise or bias wise, right, at the London Open. But it's fine, right? It's fine. That's why I reduced my risk on most of my trades from 0.25%, to 0.10, 0.15%, right? Because the setup was not 100% optimal. But the reason that I really don't care about getting stopped out and being on the red, a little bit, is because I know that by taking the same, trade on a vacuum, it prints money. I don't care about the outcome of that particular trade. I care about if that particular trade prints money long term. And it does, right? So that's why, that's the edge that we have in the market. Remember that we are battling against the biggest fishes, the biggest whales, I'm sorry, the biggest whales, people with a lot more information than us, people that have a ton more money than us that can actually move the markets. We, we have absolutely no edge outside probabilities and simple math. And that's where your focus needs to be. Because if your focus is not on the math behind your entry model, you're never going to understand how to optimize it and how to maximize your profits long term. You're not going to understand why you are not profitable or why you are not consistent, right? So, trading is 2% of the time clicking the buy and sell button, and 98% of the time being on a fucking Excel sheet mining your historic data. You know, and that's the reality of this business, right? That's the reality of this business. There's absolutely no way you're going to be able to make money for a living doing this if you don't spend most of your time mining your or looking, mining your historic trade data. Is there's absolutely no way you're going to be able to do it. So, yes, and that's one thing. And the other thing is you need to detach yourself from the value of money, right? So, thinking about, looking at your open P&L and L and thinking about, you know, this is, my car payment, my mortgage, or whatever, um, also fucks with your psychology. Money is just a tool to keeping score, and it's not actual money until it's being withdrawn into your bank account. Yeah, um, there's a ton of things that you need to understand. Also, that there's going to be periods where you're going to draw down, right? So you need to have rules, on how not to exceed losses on a day, how not to, chase your losses, how not to care about, uh, you know, um, 4 consecutive losing trades, right? And it's all about, detaching yourself from the value of money, not looking at what you are trading in, how much you are winning or losing, but rather, um, the percentage of your equity that you are making or not or losing, right? Which kind of sounds a little bit counterintuitive in the sense that if you think about the percentage of your equity that you are making, you can easily, uh, uh, turn it into actual money because you know how much assets you have under management. But again, it's all about training yourself, training your mind, train your mindset about thinking in probabilities. And that's just how you do things. I mean, that's at least how I have found consistency. You know, and this another piece of advice is, uh, you know, um, uh, being a trader is not when you're in front of your computer or in front of your screens trading or clicking buttons, right? Um, it, I mean, being a trader, I mean, I know it sounds corny, but it's a lifestyle in the sense that, one, if you don't have discipline in the rest of your life, there's absolutely no way that you're going to have discipline in your trading. And two, whenever you're going through, and this just happened to me last month, right? I went through some horrible shit. Whenever you go through, an intense moment in your life, you should not be trading. You should not be trading, right? More so because of my, schedule. It's 2 a.m. here, right? So if I'm going through some intense stuff during the day, right? That means that normally my down hours are during the day. I sleep during the day. I mean, I don't sleep 9 hours during the day because I would miss the entire day and I would be a fucking vampire. So I do sleep, 4 hours at night and 4 hours during the day. But the thing is that, I mean, if I'm going through some intense stuff, personally, during the day, I'm not going to get the rest that I need to be, 100%, which is going to make me make stupid mistakes. It's all, I mean, it's an entire thing. Actually, I mean, it's a very, very, very good lifestyle in the sense that it teaches you a ton of things about yourself. It teaches you your limits. It teaches you discipline. The only way that I found discipline in my life was because of this. My mentor told me, the first thing you need to do is focus on outside of training, right? Before even starting. So, yeah, I mean, there's a ton of things that, even though what we do is semi-mechanical in the sense that we own, that we always try, I mean, that we always look for the same entry model and the same um, uh, checkboxes, which makes it semi-automated. Being 100% body-wise and mind-wise is makes an absolute difference. So, just a couple. I mean, I'm ranting about this because uh, I think it's important, right? And because I get a ton of messages on social media about, for example, um, yeah, I get a ton of, hold on. Last time I got a message on social media on Instagram, I think, that, this guy was super pissed off because he lost 70% of his account. And, I only sent one signal that day. Of course, that I'm not gonna make fun of that person to his or her face. But to me, that's quite funny because why would you put 70% of your account at risk on one single trade when you know that there is a probability that you're going to lose money? And more so if what you are trading is not something that you understand the math behind, right? It's not something that you have backtested. It's not your entry model. So, um, again, if you are going to, follow my trades, yeah, ouch. So if you are going to follow my trades, right, just have a look at, how I manage my risk, why I risk so little, right? And it's not that I mean, I'm gonna show you something. Hold on. So this is what I normally do, right? Now, this is a 50K challenge account, right? That I hit 10% profits in, um, in this is a month worth of trading. So, risking only 0.25%, right? Risking only 0.25%, right? This is what I do when normally, right? When I'm not under pressure, when I don't, I mean, when I am in the zone. This is what I do. Risking 0.25%. It adds up, right? Managing my risk, taking profits the way that I do. People always ask me, why the fuck did you take profits when the trade hit targets eventually? And the reason is because I don't fucking know. I don't fucking know if the trade is going to hit profits or not. What I do know is that the data shows me that I am the most profitable when I manage my winning trades the way that I do. And this is the result, right? Um, how many times can you take the same challenge? I mean, I think that you can take the same challenge a ton of times, right? Until you hit the top or the maximum allowed capital under management for any funding firm. Some funding firms fund you for up to $1 million. Some funding firms fund you up to 350K, 500K, depends, mate, right? For example, this account, this is a 100K account, 100K challenge. It cost me, I think, $800, right? I bought it on Sunday. I bought it on a Sunday, and yeah, right now, I mean, almost break even. I'm I'm down on the account, what, $200, which is nothing, right? Um, but the thing about trading, and the thing about this funding challenge, what I do like is that you have a set limit on the maximum drawdown. This, the challenges that I buy, right, are funding firms that there's no two phases, right? It's only one phase. If you hit 10% profit, right, they're going to fund you. But the maximum drawdown is 5%. So what I do like about those challenges is that it teaches you to actually manage capital, because this is what real rich people are looking at for, right? To grow their money, without a big drawdown. If I were to show this to, uh, that's why my partners, trust me implicitly because of this equity. My equity curve, right? But if I were to show, someone that I started with $50,000 and I ended up with $900,000, but in the middle I had a $400,000 drawdown, they're going to tell me to fuck off. So it's about the long term, right? It's about the long term in the sense that um, you can. When I first started, there were no funding firms like there are today, right? So what I did is that I started with very little capital. I think it was $2,000, and I just focused on risk management, right, and building an equity firm because I understood that during the first year, right, if I managed to create an amazing equity curve, people were going to look at that, in not, you're only managing $2,000. How do you expect to manage my 100K? Because the decisions that you make trading a small account have to be the same trading decisions that you make managing a big account, right? Because you are looking at everything in percentages and probabilities, not actual money. So yeah, just ranting about this because I think it's important. Do you have 30-day money back warranty on your VIP package? Yes, Advanced Life, I do. So yeah, go ahead and um, yeah, go ahead, and we do have a 30-day money back guarantee. Like I told you, we don't hide anything, and yeah, this is not for everybody, right? You should be trading with a group of traders that makes sense to you, clicks to you, and if this doesn't make sense to you, right? And if you don't like it, just you can ask for your money back. No, no harm done. See, U.S. dollar. Everything is so rangy right now. Tons of no trade. Now, uh, yeah, just a quick look at this because this is so fucking funny. Something that I'm not gonna take, but again, just if you look at this, you know, tons of stops here. I could see a pullback toward this level before a move higher. But again, if you look at the overall trading data from the Asian session and now the London session, there's no clear direction in the market. So I'm going to chill, right? Just waiting for this gold trade to possibly. Well, you know what? I was going to log out, but now that gold is breaking with the lows, I'm just going to wait to see if we get filled on this. Um, and if we do, it's going to be fine. Just have a look at this big ass imbalance. Probably should place my buy limits higher. Let me see. No, that's fine. They're good. So let's wait. I maxed out in NFTs. How are your NFTs doing right now? I mean, I don't own any NFTs, but the last time I heard, um, those apes were worthless. Mhm. Yeah. So a couple of things here, right, about this gold. Um, I mean, I get asked this question a ton, right? If you look at this, this is a good actual example. So we have one imbalance here. We have another one here, and we have another one here. So which one should I consider for a trade? That's the question that I always get asked. And my answer is I always I always choose the one that um, caused the break of the structure, right? Here we have the last sweep of the lows. After this pullback, here is that big break. After um, this big OB. So this is the one that I'm looking to trade. I consider these traps. We could look at a a small pullback. Then these lows are going to be taken out, and then, my friends, we have this too. Let me show you. Let me just delete this. We have this two, these highs right here on the second imbalance. So we could also have a reaction here, because what is the first thing that you're taught when you come into trading? After a breakout of an area of resistance, in this case, wait for the retest, I'm sorry, and go long, right? This is something that I advise against because it doesn't fucking work. Why? And the reason is simple, right? If you were to wait, hold on, let me just delete this. If you were to wait for the retest of the previous broken highs at this level right here, right? Where would you put your stop losses? Now, there's no structure low to place your stop losses, and because this is a very very tight move, right? Um, weak players, which are the ones that trade that retest, are not going to place their stop losses below the structured low at all because it is too wide. Why? Because they focus on pips and they focus on money. So they're going to place their stop losses just a little bit lower, like here or like here. And that is that stop hunt that I'm waiting, or this week players to get stopped out and the real imbalance to get tapped before I get triggered. And if price rallies from here, well, more power to the weak players in the market because they made money. But again, I don't chase the market, and I don't trade outside my rules. So I'm just going to wait for this trade. And what do you think about what everything that I've been saying? Because my mouth is dry. All right, so this sucks. Everything just sucks. No, the Aussie versus the USD. I'm not too keen on trading the Aussie or the Kiwi. And also, there's no setup. I don't even have the Kiwi here because I haven't back tested it, and I'm not going to. So the US dollar is crashing. That's going to make for a bull push or a bull pressure in gold, but not 100%. I know that a ton of you focus on correlations, right? In this case, the US dollar and metals, gold, right? So, there is a correlation between markets, of course, but it's never 100%. And if you look at this, right? If you look at the USD, right? Let's say that we're looking for shorts on the US dollar. That would be the case of my possible longs in gold. But if you look at the US dollar, would you take a short here? No, fuck no, right? I would look for a pullback before going short. So if that pullback doesn't happen, right? So just have a look at this. This is the same thing that I've been telling you, right? We have that broken low. We have those weak players in the market. It really doesn't matter if price breaks with lows or continuous lowers. The probability of these people getting stopped out before the actual move to the downside is quite high. And to be honest, that is the setup that I look for. Um, and sometimes it's not going to pan out in the sense that, sometimes in this case, sellers are just going to pile into the market and price going just to dip, US dollar wise, right? Which would make for a gold rally if you look at correlations in this case, right? But if it happens, if the US dollar continues to dip and dip and dip and dip, well, yeah, I missed the move, but I'm never going to place trade outside of my trading rules. That's just me. I don't know about you. Saliba breaking with the highs. Gold very possibly is going to break with the highs. And again, if gold breaks with these highs, I really don't care. I'm going to hold on to my order, right? I'm going to hold on to my order. There is a ton of room still. And it's quite premature to think about having missed this trade, in the sense that gold just plays a new structured low, right? There's still a level, the 1947.90, left to be tested, creating again a new structured low, which, if it pans out and this level is created, that is going to magnet, that liquidation, which is the one that I'm looking for. So, just looking at these 2 or 3 candles, it's really no big deal for me. Any questions, guys? Been live for 1 hour and 38 minutes. I haven't heard from you. More than happy just to ramble, right? At 2:30 in the morning. But yeah, I would love for some questions. Yeah, everything is so rangy. Just have a look at this, right? There on the Euro USD side, I'm sorry, there's no F1 strategy setup. But the reason that I'm looking at, the F1 strategy charts is because I'm just looking for Momo, right, in the market, and the lack of Momo and the lack of direction. Everything is so fucking rangy, right? Everything is so rangy. So, questions. Open to questions. Leaving you a couple of minutes to ask anything. Fear not, my friend. Fear not, my friends. Right. So, what's up? Nothing going on? All right. I really dig the setup. Right. So, just have a look at this. Right. It's the same thing. Again, I don't trade the Asian session. Right. I mean, I traded the short side in gold during the Asian session because, um, I mean, the setup was a slam dunk, right? And also, that's the reason that I only risked 0.15% because it was during the Asian session. But just have a look at this. What happened here, right? What happened here was a real reversal in the market, right? And here we had that big, big imbalance. What happened? Price came back, tapped the imbalance, and then rallied. So, that's um, that's just what I do, how I trade. Because I mean, I realized that the market has to price itself efficiently, and the reason we have inefficiencies in the market is because of volatility, right? So when I say that the market has to, shit, has to price itself efficiently, it means that it has to fill its gaps, balances or gaps in the market. And that is where I see my opportunities. So no questions, guys. Thank you for joining me. Been live for an hour and 40 minutes. More than happy to do this live, sessions. But I'm done for today. I'm gonna be back for the U.S. Open. Well, not done for today for the day, but at least for the London session, I am done. Let's have a look at the economic calendar. Forex Factory economic calendar. hmm So we have PPI, we have the federal funds rate. That's the reason that the markets are so rangy. Yeah, big week today. So it is expected that um, the Federal Reserve is going to halt its massive rate hikes. You know what? Let's have a look at what the futures market had to say. Um, um, what expectations? But there is hold on. Here it is. So, bum 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 bum. This is today's. Well, you know what? Is this today? Hold on. June 14th, 2023. So this is, yeah, this is wrong, right? So, the market current rate target current target rate is 5% to 5.25%. So, yeah, I mean, I'm sorry, this is right. So, 95% probability of the rate, the Federal Reserve sticking with a 5.25% rate, and just 5% chance of a rate hike. That is not going to be good for the USD. So, yeah, probably going to stick probably going to stick only to this gold setup. Remember that uh, the federal funds rate release is during midday New York session, so we do still have a ton of trading hours left, but the markets might stick on this rangy mood for the entire day. Um, Sticking with this gold long, just that one, and I don't think I'm going to be placing any trades during. Well, if you look at the S&P 500, right? What a clean break of the Asian session range. So, we do have when it comes to U.S. equities, my preferred market is the Nasdaq. And here I have a massive setup long on the Nasdaq. Oh boy, this is looking very tasty, but I'm not gonna take it right now. Just have a look at this big ass imbalance. So, my trade opportunity would come here. Hold on. Yep, would come here. Would come here. um, and target. Let's have a look at that. We're talking about highs. Three R on the Nasdaq. Possibly same thing on the S&P. I don't trade the Dow myself, but again, yeah, same thing. So possible longs on the Nasdaq, the S&P 500 during the open, sticking with this gold. Thank you for joining me. I'll see you guys later.